right? Now, after the finish of this uptrend, is there any way to know that the next trend is started with a higher probability chance? Yes. Like we said, these are impulsive waves, and this one is an impulsive wave. So this uptrend, at some point, it will finish. And how you can know that? You apply the trend line tools, and you look for divergence between the last impulsive waves, and then the main focus for you should be on structures. Structures means the waves. And this one, once you get this sharp down wave here, this will be your sign that this trend has ended. But there is here an important point that you have to focus on, which is this one. The last higher low. Focus, guys, on this point here. Once you get this down wave and we break the last higher low, at this point of the time, we will have a higher probability chance that the next structure has started, or the next trend. If this is the last wave of a corrective structure in a daily chart, this means you will get a big downtrend in 1 hour chart. So this point is very important. The last higher low in an uptrend. In other means, once we get this down wave here and we broke the last mono wave, because here in this one, this is our last impulse, which is the last mono wave here. Once we get a sharp down wave and we break the last mono wave, at this point of the time, guys, this is a great sign for us that we might have a shift of trend. So this means if we are trending to the upside, this wave, it might be the first impulse of the next trend. Alright? This is the last higher low in an uptrend. And this one is the last up wave. Alright? Once we got this down wave, which should be sharp and fast, and we break the last higher low, at this point of the time, we have a higher probability chance that we have a shift of trend. Let me repeat this. This is the last higher low, this point. Once we get a sharp down wave and we break the last higher low, at this point of the time, we can say that this trend has ended and we have a higher probability chance to get the next trend. So this is your edge here. This is an impulsive wave, this is an impulsive wave, and this also an impulsive wave. So this one usually it will be sharp, or else it will be an ending structure, and then this wave, it should be a sharp wave. If this is going like that slowly, this means this is a corrective structure, another push up. This is why this one, it should be sharp and fast. So this means this is an impulsive wave. Once this one goes down and broke the last impulse, which is this one, we have here a high probability chance that we are shifting in the trend. Alright? In other means, this will be what? This will be the start of the next trend. But remember, your job is not to pick tops and bottoms. Your job is to wait market structure to give you confirmation and go for the next wave. Do not forget that. Your job is to trade the next wave, not the first one. Because if you try to trade the first wave, you are trying to pick tops and bottoms, and this is very hard. If you try to pick tops and bottoms, this means you are jumping in. You wait market structure, and then you go for the next wave. Alright, guys? So this is what you have to wait here in this one. The first wave of the next structure. Once we get this first wave, which should be sharp and fast, and we break the last mono wave, remember guys, this is the last mono wave, alright? Once we've got this down wave, we break the last mono wave, this is a great sign for us that this trend has ended. And if this is a C wave of a regular flat or expanding flat, this means here we are starting a big wave to the downside to break what? The previous impulse. Why breaking this last higher low is very important. Because here guys, if we combine structure with wave analysis, with price action, with market participants, here's the truth. Above the stop here, what do we have? Above the stop, we have market orders for retail traders. What are these market orders here? These are stop loss for those who are going in this sell here, in this downtrend, or retail traders who are selling here. There is liquidity above this stop, above the last higher high, which we call it major high. All retail traders who are in the sell here with this downtrend, they are trapped in this downtrend. The stop loss is above this one. Alright? And also above this one, what do we have? we have the retail traders who trade breakouts. So this means above this top, this is an uptrend, I will buy here. Where the stop loss is? Under this low, under the last higher low, which is here. Okay? So in this one, you have buy orders, which are buy stops for those who trade breakouts. And you have what? You have also sell stops, which are also buy orders for those who are in the sell here in this downtrend. Let me repeat this. Above this higher high, we have liquidity. Do not forget, a lot of retail traders are trapped in this downtrend here. So once they get in here, they will put stop loss above the high. Why? Because they think this is what? This is the last high and market is going down. Okay? So above this one, those retail traders who are in the sell, they have their stop losses above the last higher high. We call this one a major high at this point of the time. So the stop loss of these retail traders who are in the sell here is a buy order. Alright? Because they are selling, the stop loss of them is a buy order. Now, the next group of retail traders, they will buy above this top. Why? Because they are what? Trend followers. Those who follow the trend, they will buy at this breakout. What do we have above this top? We have also market orders, which are buy orders, and mainly they are buy stops. These orders here, they are buy stops. This means they will put an order basically here. If market will push to the upside, they are in the buy. Okay? Some of them, they will wait here retracement and then up again, which they call it retest. So they will wait this up, down, and then up again. Retest of this what? They will wait this one up, break and close, retest, and then they will buy again. What market makers they will do? They will push market down under these lows. What do we have under these lows, guys? Stop loss of these retail traders. Remember, the only retail traders who are in here are those who what? Who are in the buy. Because those who were selling, they are out here above the stop. Market makers, they will push market all the way down to take their stop losses under this low. Okay? So if market makers are pushing market down in a sharp and down wave, this means what? This means they are selling. If market makers are selling, you have to go for the next trend. Because they will here repeat the same scenario what they did here. Okay? They will trap retail traders in this buy and then so on. This, guys, creates waves and structure. I will show you examples straight away on the charts, but I want all of you to understand this part. Here, we are analyzing what? We are analyzing an uptrend. And all of you know what is this one, what is this one, and what's happening here in this upwave. Market makers, they will push market up to take everybody out above this top and trap retail traders to get in the buy even above this top. What they will do here? They will try to break the top, make a pullback, and then up again. In this one, a lot of retail traders, they will get in the buy even from here. After this, market will drop in a sharp and fast wave. And we need this one to be sharp and fast. Because if this is not the case, if you see market going slowly, they are repeating the same scenario for another push up. If market is going up slowly, repeating the same scenario for another push up. So usually, market moves in 3 or 5 waves. But if you see it moving in more than that, don't be surprised. Okay? Because 3 and 5 waves is more than enough for market makers to trap retail traders to be in and then shift the market for the next cycle. Remember, those who are in here for this upwave, this an uptrend. You keep buying until market takes you out. And you know me saying this so often on YouTube. If you are a day trader, you keep buying until market takes you out. Because this is an uptrend. Now those who are analyzing the markets from here or from here, you have to wait what? To go for the sell setups or wait a big corrective structure to go for the next upwave. Now, what you will get if this is the first wave, 1A or W, you will get down, correction, down, and then up again. What this corrective structure will be? Any corrective pattern that you know. You have to analyze this step by step, wave by wave. Now, what if this one is the last wave, which is C5Z? This one, it might be the start of the next downtrend to break the previous bigger impulse. Alright guys, is that clear? At the moment, I want you to focus on this pattern. Up, correction, up, and then sharp down to break the last wave, which is this one, and then corrective structure. This is the pattern that you have to see at the end of an uptrend. Focus on these points. This one, this one, this one, this one, and this here. This is sharp, this corrective. This is sharp, and this is sharp. So reversal will look like impulsive, impulsive. Alright? This is an impulsive wave, and this is an impulsive wave. If this is the last wave, it should be sharp or slow in a form of what? Of ending diagonal. Why ending diagonal? Because ending diagonal will appear in the last wave only. And you know the form and the pattern of ending diagonal. So the last wave, it will be slow only if we have an ending diagonal structure. Otherwise, it will be an impulsive wave, 1, 3, or 5 waves. This might be complex for some of you, but we are trying to get you the knowledge, guys, step by step, day by day. If you will not take notes, day after day, you might be lost. Now, if this is the start of this uptrend, and this one, if we have a down wave like this, you have to see this up wave going up, and we break what? We break the last mono wave, which is this one. Alright? Sharp up, correction, and up again. We have this trend line, we might have diverged between this wave, and then this sharp up wave, which will be the first impulse of the next structure. 1A or W, correction, and up again. Is that clear? What we are explaining here is market structure, shift of trend, and break of the last mono wave. In an uptrend, this will be the last higher low. Once you get a new low instead of higher low, this means here, this is a sign for you that the trend has ended, and this is the first wave of the next structure. This is the first wave of the next structure and not the next trend. Because if this is 1A or W, here you will get a corrective structure, which might be what? Running or expanding flat and then up. If this is the last wave and you get this down wave, then corrective structure will go up to break this top. Here we can say we are getting a change of structure. This means what? Down, running or expanding flat, one more push up, and then down. Instead of what? Instead of a trending mode to the downside. Those explanations, guys, are very critical. If this is your last higher low here, and market went down, we broke this one, this is the first wave of the next structure. If this is the first wave of the next structure, and here you have 1A or W, here it will be 1A or W also in a lower degree than this one. 1A or W, corrective structure, if this will be a regular flat, you know, here you will get basically BC or XY. Alright? Now, if this corrective structure here went up to break this top, in this one, you will not have any more 1 or W. You will have only A, because if we go up correctively and we break this top, we will get running or expanding flat. So this means ABC in all cases. Alright? This will be B, this will be C, and then up again. Is that clear, guys? If this corrective structure went up and we break this top, and here we are at the end of structure, which means like C or 5, at this point of the time, we say we are getting a change of structure for one more push down, one more push up, and then down again. And the structure will be completed here, up, correction, and up. Let's assume now this is wave 5, C, or Z. Once you get this down wave here, sharp down wave, this will be your first impulse of the next structure. What you have to wait? You have to wait a corrective wave, corrective pattern that you know, and then the next down wave. What will be this corrective structure? You have to analyze inside this one step by step, wave by wave. Alright? At the moment, guys, focus on structure and what we are explaining right now. Now, before we go to examples straight away on the charts, let me give you a scenario here for a downtrend. If you get this down, correction, down, correction, down, down, and then this sharp up wave, you need this sharp up wave to go up and break the last mono wave that you can see, right? The last mono wave that you can see. Characteristics of a reversal, it will be sharp down, sharp up. And this up wave, it should break the last mono wave, which is this one. This is the last mono wave. We've got this sharp up wave and broke the last mono wave. In a downtrend, this will be the last lower high. And then what after that? Sharp down, and sharp up. This is a lower low. So if you are not getting lower highs anymore, this means you might be having shift and trend. With all the tools, this is the trend line here. You look for diverge between this wave and this wave. Once you get this up wave, this is the first wave of the next structure. Breaking of the last lower high in a downtrend and the last higher low in an uptrend is a sign for us that the trend has ended and you might be getting a shift of trend. Alright? If this is your first impulse, you know what to do after this. You wait corrective structure, up, 1A or W, you know what you should do here for this one. If this is 1A or W, you know what next. Corrective structure, you trade the next wave. Alright guys, let me give you examples regarding this one before we go for the next topic. As example here in this pound dollar, let's go for 4 hours just to show you this in details. If we zoom out, look what happened here. In this one, we are in a downtrend, right? Then correction, then correction, then correction, and then. Look at this. Focus on this one. This one, and this one, right? We're in a downtrend. And this one, we've got this then, we've got this corrective structure, and we've got what? This down wave. What after this? We've got this sharp up move. We break the last mono wave, which is this one. In this part, guys, we broke the last mono wave, which is here. Okay? And then we've got what? This up wave. Usually, for this one, guys, we look at it in the 1 hour chart. But like I said, wave analysis works on every time frame on any tradable asset. What you have to do? It's a top-down analysis. You start from the yearly, www.fxtop.com, all the way down to the 1 hour chart. We analyze this, guys, all the way down to 1 hour chart. Under 1 hour, we do not go. Because the more you go lower in the time frames, the more you will get noise. Lower time frame we look at is only 1 hour. Anyway, coming back to the topic here. We've got this down wave, corrective structure, and then down wave. After this, all the way up to break the last mono wave. So, look at this. If we put these arrows here, down, correction, down, another up wave, and then a corrective structure. Can you see this, guys, all of you? Can you see the pattern here? Down, correction, down, sharp up, and corrective structure. Focus on these points. This one, this one, this one, and this one in a downtrend. If this is 1A or W, you wait a corrective structure, you go for the next up wave. Your trade is this one. In the next classes, we'll go in this one, guys, in details, alright? For now, like I said, focus on the topic and focus on structures. Now, inside this one, guys, I want you to focus here because it's very important to know the fractal nature of the market and to see how to analyze and how to look at the charts. Okay? Now, inside this one, what do we have? We have up, correction, up, correction, up, correction, up, another corrective structure, and look at this. Sharp up, sharp down. If you go for this trend line, here in this one, this is the start of the corrective structure. So this means here 1A or W has finished, right? This is an uptrend in 1 hour chart. So we've got this sharp down, corrective structure, down, another correction, and then down again. Okay, guys, can you see this, all of you? I'm explaining you this pattern at the moment. Up, correction, sharp up, sharp down, correction. Now, if you look at it here, sharp down, correction, sharp down, sharp up, correction. Can you see it? Let's go for more examples. If I zoom in, we've got this up, we broke the last mono wave, which is this one here, and then we've got an expanding flat after this, and then up wave. Can you see this pattern here? Sharp down, correction, sharp down, sharp up, corrective structure. In a downtrend, this is what you need to look for a trend reversal at the end of the structure. Now, inside this one, we have up, correction, up, up, again, and look at this one. We've got sharp up, sharp down, corrective structure, and then down wave. This is your trade. This is your trade here for the upside, and this is your trade for the downside. Guys, do not trade live. I'm explaining you now the topic. Again, in this one, up, correction, correction, up, up, and then sharp down, pull back, which is a corrective structure, and another big drop. Let me show you more examples. If we go to any other charts, let's go for Eurodollar as example. Look at this one here at the start of the trend. Look what happened here for Eurodollar. In this one, we've got down, correction. Can you see it, guys? Let me zoom in. We've got down, correction, sharp down, and then up again before we get what? The next corrective wave. So if this is 1A or W here, 1A or W, what do we have to wait? A corrective structure. So this is sharp up, this is sharp down. Are we going to buy from here? No. Why? Because we have to wait a corrective structure, and for us, corrective structure is minimum 3 waves. In this one, we have only 1 wave, sharp down wave. So at this point of the time, this will be the first wave of the next structure. So if this is 1A or W here, we have to wait what? A 3-wave structure, and we've got it here. Down, correction, and down. This is what? This is a regular flat for us. Okay? Now, in this regular flat, we have what? We have a trend. This is a downtrend here. So we can draw the trend line, and we've got what? We've got this sharp up. We broke the last monowave. This is the last monowave here that we broke in this downtrend. Can you see that, guys? Down, correction, down, sharp up. Okay? This is a simulation for this one. Now, also focus with me in this one. Down, correction, sharp down, sharp up, and then corrective structure. Okay? Down, correction, sharp down, sharp up, and then corrective structure. This is the same pattern also for this one. Let me draw it for you in other colors. Down, correction, down. This is a downtrend. Then we've got sharp up, corrective structure. This is the pattern. Look at this. Sharp down, corrective structure, sharp down, sharp up, correction. This is the pattern of reversal. Now, look at this. Sharp down, correction, sharp down, sharp up, and then corrective structure. This is the same pattern, but you have to train your eyes to see it on the charts. All right? Another example. Look at this. We've got this sharp up. We broke what? We broke the last monowave. This is the last monowave that we can see here. We've got this sharp up. What we've got after that? We've got a corrective structure, another push up. This is a regular flat. So here we have a trend to the upside. So we've got this up, this corrective structure, and this up. What do we have here? We have a trend to the upside. We have high, higher low, and higher high, right? Even inside this wave, what do we have? We have sharp up, corrective structure, sharp up. Now inside this wave also, what do we have? If you look at this one in the 1 hour, you will see up, correction, up, and then sharp down, corrective structure, down. Alright guys? Look at this example as well. Up, correction, up, up. This is the highest point here, right? This is the last higher low. This is a higher high, so this means this is our last impulsive wave to the upside. We've got sharp down, we broke the last monowave, corrective structure, all the way down. Is that clear, guys, for all of you? Let's see this in bigger time frames. If we go to gold as example daily chart, look at this. In this one, we've got down, correction, down, and look at this. This was the last down wave here in this ending diagonal, if you remember this one. This was an ending diagonal, and this is the last down wave. This is wave 5 of wave 5. What we've got after this? We've got sharp up move. Okay? If this is 1A or W, you'll wait a corrective structure and then up again. This was a contracting flat for gold. Even this, guys, applicable in 1 hour chart. If we go to any other chart, let me give you an example. Let's go to Aussie Swiss as example, 1 hour. All of you remember this forecast to the upside, right? But look at this from here. We've got this up wave, we've got this corrective structure, and then up again. Another correction, up. This turns out to be a part of the corrective structure, one more push down. So this is a complete corrective structure. Look what happened here. Down, correction, down, and then all the way down here. After that, we've got this sharp up wave. This is our sign for what? For reversal. We've got a pullback and then up again. Let's go to CAT Swiss as example. We'll go to the 1 hour, but look at this. Remember this, up, correction, up, right? Let's go to 1 hour and see the charts here. In the 1 hour, guys, look what do we have. In this one, we're in a downtrend. Then correction, then correction, then, and then a sharp up wave, right? We broke the last mono wave, and then we've got a corrective structure. So this up, it was a sign that the trend has ended, and we are in an uptrend. Correction up, and then up again. Do not forget the degrees and the fractal nature of the market. So after the completion of this wave, market has what? Has to give us a corrective structure. Look at this. This was the last down wave for this degree, right? So sharp down, and this was a sharp up. We broke the last mono wave. What we've got after that? We've got down, correction, and down. This was what? A regular flat, another up wave. Can you start to see, guys, the combination, the fractal nature of the market, structure, break of the last mono wave, break of the last higher low, and the last lower high? Also in this one, guys, look at this. We have down correction all the way up till here. After that, we've got the sharp up, corrective structure, and up again. Right? Now, look at this part. We have here what? We have this sharp up, down, up, down, up. And this one, guys, a lot of retail traders who would like to pick tops and bottoms, they are out here 2 times. Do you think they will get in again? No. Now, after this sharp down wave, we broke the last mono wave here. We've got a corrective structure, another down wave. Again, and this one, up. We broke the last mono wave here, corrective structure, up again. For this part, up, correction, up. Look what happened here. Market went down all the way here. We've got a corrective structure, this an expanding flat, and then down. And this part here, this was the last mono wave. Alright, guys? So, in this, up, correction, up. This is the pattern that we were studying from the first day. Step by step, you will understand the concept. But take notes and practice. You have to practice as much as you can. This is the pattern, right? Down, correction, down. Up, correction, up. Up, correction, up. For this up, we've got the corrective structure, another push up. For this up wave, we've got corrective structure, another up wave. Right? Even for this one, look at this. We've got up, correction, up, then sharp down wave, small corrective structure, another down wave, before we move to the upside again. So for this down wave, we've got this down wave. For this up, we've got this up. For this up, we've got this up. Fractal nature of the market, weighted waves, pattern. I hope, guys, this is clear regarding the market structure and the break of the last mono wave. So, do not forget, after this up wave, guys, and once you get this down move, you have to wait a corrective structure here before the next down wave. All of you know the weekly forecast. Now, if you go and start toward the weekly forecast again, you will understand the structure and you will understand what I am trying to explain. When I say wait a corrective structure, this is what I mean. As an example, currently in all the major pairs, let's say for Aussie dollar, if we go to Aussie dollar for our chart, that's why I said here, wait a corrective structure before you go for the next sell setup. Also for New Zealand dollar, wait a corrective structure before you go for the next sell setup. For this down wave, we have to get a down move. We will go into more details, guys, on the live sessions, right? So do not miss the live sessions. We have a lot to cover also on the live sessions. For now, like I said, try to understand the concept and what we are trying to explain you. Why this has to be a corrective structure? Because if this will be going sharp up again, we'll break this top one more time. We are not controlling the market and no one can control the market. If this is a market maker move, they have to trap retail traders in this uptrend before they push market down again. This is your confirmation. A corrective structure here is your confirmation. Can you trade within this corrective structure? Yes, you can. Right? So, what next? This one here I said if this will be the first wave of the next structure, we have to wait a correction here before we go for the next sell setup. Alright? Keep in mind that this might be the start of the bigger corrective structure before we move up again. So for us, this is an impulsive wave from here all the way up to here. If this is an impulsive wave and this is the start of the bigger wave, Now we are here in the first wave of the next structure. What is our confirmation? A corrective structure here in lower time frames, okay? Or even in 4 hours chart. But this is what we can see for New Zealand dollar, and this is why we were saying a down wave. Right guys? Is that clear for all of you? Why we are putting this only to here? Because this might turn out to be another corrective structure, one will push up, and then the bigger corrective structure again. Market has to give us a big corrective structure from here or above this top. For now, what we can see a corrective structure, one more push down. Okay? All what we can see at the moment is this as an impulsive wave, first wave of the next structure. We are expecting that this next structure to be the first wave of the bigger corrective wave. Can you guys